Thank you so much for joining us today.
It's a pleasure being here. Thank you, Perpetual.
Absolutely. I would like us to just, start from the basics, really, because there are so many players in the capital market, and some would wonder, what exactly is the role of CSCS?
So the way I always put it in simplistic terms is that you have a buyer and a seller. They go to a market, but then who delivers the goods and who delivers the cash to the seller and to the buyer? In this context, because most of the instruments are paperless, so we act as that intermediary between the buyer and the seller when the trade is finished, to ensure that the money we take from the buyer and give to the seller, and we take the securities from the seller and give to the buyer, all done electronically at the end of every day in some context. So, and also keep the securities in custody for the buyer in case he wants to sell it again. So this is in the nutshell what we do. But beyond that, it's actually much more than that. As it is, as a CSD, which is a Central Securities Depository, you are responsible for eliminating the risk of settlement. You are responsible for the risk of, eliminating fraudulent transfers or otherwise. You are responsible for eliminating the risk of delivery and settlement at the same time. And so we are typically defined by CPMI as a financial market infrastructure, which is also a SIFI. Systematically important financial institutions. You're smiling at that, but I had to throw a few words so we look important.
That's quite interesting. So talk to us really about, what you would say about the Nigerian capital market so far.
So I think we've come a long way. If I look at the history of how we started, at least from my own end in my career, I started about 1993, 1994. Yes, that long. We've seen significant trajectory in terms of growth, either in the way business is done, whether it's buy and sell, or in the way proprietary book is done, or in the way investment management has been done, and even in the way the market structure has been defined in some way or form. Certainly, it has come a long way. It's become more automated. It's become more sophisticated. It has become more direct in terms of participation, especially the intermediaries and the trade points in how clients are acquired. Certainly, also in terms of how issuers are, being, interfaced with. So these are the guys that actually get listed and how they get listed. In a nutshell, I think we've gone very far. We've grown significantly. What we need to do is just leap up out of what we are right now, and and get the momentum, because the infrastructure has been built for that.
All right. So beyond the infrastructure, what more do we need to leap?
So in my mind, I think investor education is very key. We need to apply the technology that has been built individually within the ecosystem and maybe tie it together. We need to bring in the more retail investors. So I look at it, if CBEX can raise that kind of money, quietly, one institution, imagine what multiple institutions with that type of technology, with the investor education that's required, I mean, it's amazing what can be done within that.
Is there a lesson that can be learned from the likes of CBEX?
Absolutely. So what we need to understand is, what is the pressure point for investors, right? What kind of return are they looking for? What is the ease of doing business in the market for them? How can they trust the market for them to understand that there's going to be return? So if we fix some of these things from that investor education, if you like, purpose, then you're likely to see them come into our market and actually act in that sophisticated manner, for that matter. Yeah.
But maybe it's just the greed of these people, because at the end of the day, you do not expect to get that sort of reward from investing within a short period. So
again, it's about the investor education. Do investors think that if you put 1 naira, you get 2 naira in 1 month? It's impossible. That's why it's called a Ponzi scheme. Do investors expect that? Or do investors want that? So human nature, we're greedy human beings. I mean, human beings are generally greedy. And once you bring out something that really looks like an impossible return and you test it once or twice, they're likely to do that. But, if it's in a structured environment, if they're educated about what is the possible return, what is the real return, and what can be done, everybody's looking for a return, but, if we're able to do it in the context of what I think, fund managers should do, I think it's possible.
Let's go back to the CSCS. I mean, talk to us about how the depository sort of manages risks and sort of ensure the integrity of the securities held.
So in the first place, what we do is we have principles and policies that we follow. So there are standards globally. So you have the standards done by ISA, International Security Services Association, which sets out like standards. We have the principles defined by CPMI. I think there are 12 of them in terms of how CSDs should behave. And then, of course, there's rules and regulations by the SEC. There's best practice globally how markets generally just adopt things in terms of processes. So what we do as CSCS, the first thing we do is before we go into a process of going to a rule in terms of our own suggestions to how rules are made, before we go into defining even a product that we do, we have first of all go and check in what happens in London, what happens in New York, what happens in Singapore, what happens in India, what happens in Johannesburg. Now, if we aggregate all of what those things happen, we now come back and write a process or begin to develop a product in that context. Now, why do we do that? Very simple. We don't want an investor to leave South Africa and come to Nigeria and see it differently, or to leave London and come to Nigeria and see it differently, or the US, or even our own investors who can be sophisticated and investing in other markets. So when we bring in those standards and writing those policies and putting those processes, the whole thinking is that it shouldn't be different, but more importantly is that, is it safe? Does it have risk management in it? Is it fair? Does it meet the standards that's required for our investors and our intermediaries? So if we define all of those things, the tendency is that we get to put these things right. And as of today, I believe that we have operated a no-fails market for 26 years, and I'm proud to say that that continues to be where we are.
Absolutely. I mean, you talked about something earlier. That's talking about maybe security and all of that. I mean, should we rest assured that nothing will happen to our securities and monies?
I honestly can't tell you nothing will happen. But do we have safeguards such that nothing will happen? Yes, we do. But more importantly, if anything happens, what do we do? Do you have a recovery mechanism? Do you have processes in place to protect it? Which is why we tend to, because we've built a lot of our systems based on technology and automation. We tend to ensure that the cybersecurity aspect of what we do is key. And by extension, it means that we are also leaders in terms of thought process for cybersecurity awareness in our market, because we have people connecting to us. You're as weak as your weakest link. So that concept of, first of all, build systems, be resilient, have recovery systems, but more importantly is your ecosystem must also know how to do all of those things. Otherwise, you'll be affected. So we definitely leaders in that context, and I can tell you that as much as possible, we also partner with, if you like, significant counterparties who actually understand the security systems and have the solutions that help us protect ourselves. Will it happen? I don't know.
Has it happened?
So far, no. But the thing about security is that you never know your heart until you find out. But so far, I think our assets are pretty much, are protected within the context of what we can do. And again, if it does happen, I think it's about how do we recover, what resilience do we have, and ensure that there is nobody being affected in the market.
Absolutely, that's interesting. Before I let you go, I mean, there is this issue that has come to my notice. There are those, I'm not sure this really rests with the CSCS, but maybe you can provide some succor or some answer. So a situation where, we've had the capitalization exercise of certain banks, and they have done allotment, and then there are those who haven't gotten the allotment, and the stockbroker is saying, speak to the registrar. The registrar is saying, we'll get back to you. So now nothing, no feedback on whether or not it was successful, the money was not returned, and then the shares have not been allotted.
So when we did the public offer in partnership with the NGX, we had built the back end of that public offer to be done digitally. I can tell you that the ones that came through the process of that digital platform have a reconciled, position. Now, the ones I'm not sure are the ones that came on paper, which the registrar will process. And if an allotment has been approved by the central bank and the SEC, what we get is a digital version of that allotment. At CSCS, we've not gotten any digital version of an allotment that we've not uploaded. Are there maybe certain issues that have happened between what the issuing house has done and the registrar? I suspect there's one or two, but I understand that the issuing house is trying to solve that issue. But I think it's a very small quantity of investors that are affected, either because they don't have...
not the only one.
So I feel there's a small quantity, and probably it's because the right information has not been provided. So for example, before you open a CSCS account, there are 11 fields that you have to fill, including your BVN, your bank account number, your address, proof of address, and all of those things.
But that's not the only one. The other ones are successful, so just this particular one.
Yes, so because they have not been, the forms have not been appropriately filled, there are gaps in them, and because we don't want to go forward having unclaimed dividends, and the SEC has ruled that you must have a KYC before an account to open. If the KYC is incomplete, that probably becomes the issue. However, we will look into it again and see how we can assist them in ensuring that all the investors get their allotment done and appropriately.
All right, thank you so much. Just before we go, is there something you would like the investing public to know?
So, to be honest, I think it's about paying attention to, the knowledge gap and the need for them to understand. Investors in Nigeria have been burnt by multiple series of, schemes. But I think they should stick to the registered SEC, registered capital market operators. They should seek for advice from their brokers or investment advisors. They should take a look at whatever investments and be wayful of what I call quick wins and quick monies, because they don't really happen. What you do is you get cheated.
Absolutely. Thank you so much, sir, for coming on the show and for sharing your thoughts with us.
Thank you very much. It's my pleasure.